Good morning, traders. It is 8:01 a.m. Chicago time on Wednesday, the 29th of March, 2023. How are you today? How are you doing? How are you surviving this kind of messy trade so far for the year, really? Um, this is episode number 2439. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. We talk about past performance here and there with the statistics. Um, and so we have to offer that disclaimer. Here's the convergent trading pre-market summary sheet. Mild risk on today. We have the Euro Stocks 50 beating everyone else at 1.19%. The Nasdaq's doing pretty good. It's almost up 1%, 125 points, and the S&P popping higher, 35 points. We're seeing a push in crude. Crude had a big push yesterday and is continuing. Crude is up 1.2327%, 93 cents. And of course, the crypto markets kind of making a comeback lately. Very interesting play there. In case you didn't know, Bitcoin has an event contract on the CME. I don't know if you've looked at these or not, but very interesting, where you can trade a prediction for the end of day settlement. And if it's above and you own the call, it pays. If it's below and you own the put, it pays, and so on, with limited risk. So very interesting product there. We'll be talking more and more about those as we go along, because I think they're actually decent for many traders with small account sizes. President Biden to push new banking rules after Silicon Valley Bank collapse. Lucid announces 1,300 jobs cut. Binance sees $2 billion in outflows following fee changes, software issues, and regulator lawsuit. Apple releases new pay later service. Nice payday loans from Apple. Amazon said to be considering purchase of AMC. That's interesting. This morning, as far as the calendar is concerned, we had the GfK consumer confidence out of Germany. Came in slightly worse, negative 29.5 versus negative 29.2 expected. There were a lot of numbers this morning, the MBA mortgage numbers and so on, just a slew of them. We did get, we will get pending home sales today, relatively important, and the crude oil stock change, the EIA reports. This list of economic releases just seems to get longer and longer. Like crude used to be 3 lines: crude oil stock change, gasoline stock change, and then the I believe it was the distillate. No, it's a Cushing crude oil stock change. Now it's distillate fuel, heating oil, gasoline. No, yeah, gasoline production, distillate stock change, oil imports, refinery crude runs. Like, it's pretty intense. But those are coming out at 10:30 today. We have several auctions going on today. 17-week bill auction, 2-year FRN auction, 7-year note auction. 7-year note auction, and then we get BOE's man, ECB Schnabel, business confidence out of Korea, and so on and so on and so forth. The S&P multi-distribution profile, big rally in the overnight session. The inventory is 100% long, and the volume's 199,000, still relatively low compared to the stat there that you see at the bottom, 252-day volume mode. The mode being the most occurring volume in the range. The daily range is 280,000 contracts, and the range is 34 and a quarter, which is in line with the mode. mode being 31. These are all stats that I'm referring to that are down here. They're at the bottom of the page here. Yellow on white doesn't look so right, but there it is. I don't want to change the color. Okay, so what did we expect yesterday? So yesterday, here's yesterday's trader bite real quick. The expectation, we saw that we pushed higher on Monday. The retest failed to hold above the 40-20. 40-20 line, really important up here. It's the next key level up here. 40-20 couldn't hold, and it finished lower. Now, yesterday we settled at 4,000, or yesterday's session, Tuesday's session, we settled at 4,001 and a quarter. Last Friday, or 4,001 and a half, 4,001 and a half settlement on the June contract yesterday. On Friday, we settled at 4,001 and a quarter. Monday, we settled at 4,007 and a quarter. So what we did is we settled at 1 and a quarter, then settled at 7 and a quarter, then settled at 1 and a half, and we are absolutely continuing to battle this 4,000 range, a major strike, millennium number. So yesterday, with the way it closed, not yesterday, Monday, with the way it closed, the expectation is we were likely to test 90, and then we're looking for 70 next, except that I omitted the 81. What's the 81? Can anyone tell me what the 81 is in between those? Let me know if you know what that is. You should be aware of these levels. For the Convergent members, you have these in your master levels that are projected on your platform, Ninja, Edge Pro X, Sierra, whatever. Should be projected on your platform what these levels are. Tell me what the 81 is. So this is the expectation. We expected it to pull down and test between 90 and 90, then potentially 70. But ultimately, I was looking for the bounce. If you were here yesterday, you heard me talk about the very, very likelihood that we would turn around and push higher. Let's move forward so that you're not hearing me talk about something that I may not have said. There it is. So yesterday I talked about the overall that's right, it is last month's low. So what we did yesterday is we poked through last month's low. We had a failed auction at last month's low. Does everybody know what a failed auction is? It's like other people call it a liquidity sweep, these kinds of terms. But liquidity option, that term's been around since the 1900s probably. And a failed auction is when we test a level. So the prior month's low is 81.75. Yesterday's low is around 80 something, 80.75, something like that. And then we pushed right away from that higher low and then continued to squeeze higher yesterday. Wasn't a very aggressive failed auction. Failed auctions generally kind of reverse. You have a V bottom and it just screams the other way. And so it took out the prior month's low, checked below the prior month's low, and then it rejected those prices where we normally would think that if we take out the prior month's low, this ends the one-time framing on the monthly, and this would cause a flush of anybody that's sitting below that monthly low with their stop. But we didn't see that yesterday. We didn't see massive delta below there, and then when the market turns around and it pushes higher, and it sets us up for this run throughout the night. And so this is what my point being. It did almost exactly what was expected. I did expect it to turn in the 90, if not push to the 70. I omitted, because I don't have it on this chart, I omitted the prior month's low, and I frankly expected the flush through the prior month's low anyway, and it held. I mean, it's very, very unusual that it does that. to take out the month's low and then just kind of turn around. Just the auction just stops and it turns around. But there was quite a bit that traded at that low, and there were resting bids and icebergs down there showing demand, and the market just moved away and pushed. And what I was saying is we're likely then to push to 40.50, 40.74, which is the FOMC high, 40.74. So I'm only going to talk about the handle. I'm not going to talk about the 0.25, 0.5, 0.75. I'm just going to speak about the handle, the actual round number. So 50, 74, and then looking for 4100 and ultimately 4180 or so. And the reason I talked about this is because I was discussing how this is not giving up these high prices. See, we were way up here and we are not moving away and down into the 38 handle. We're sitting sideways. So yesterday we dragged ourselves down, and then we finished relatively strong. We started to push higher, and so the overnight session. See this down here? This actually, I've lost the MBO data because I'm at home now and I had to restart my platform, so that MBO data gets wiped and gets replaced by tick data. And you could see still there was quite a bit going on at the low here of the month, this low month price. You could see on the profile quite a bit traded in this region, and then it pushes back to the mid VWAP sandwich, higher low, more VWAP sandwich, push through to the open, pull back to the sandwich, and then use that as a base to kind of launch off right at the close, to launch right off. And then from there, we never looked back. The settlement is down here at 1.5, and we have just walked away from this. So what we've done is we skipped through Monday's auction and are opening in a gap above Monday's auction after yesterday. So there's a big gap here, low probability of a fill, and we're already testing the 40 this Friday's high, and we are back in balance with last week's FOMC decision, not Friday, I mean Thursday. The FOMC decision, if you recall, on Thursday we tested the FOMC point of control, which was exactly what was expected, and then we pushed down and finished somewhere in here in the 39.80 zone, and we are back up here. And since we're back up here, I'm expecting it to run through the ledge at the 40.50 and right up the flagpole into the 40.74 at the top of the FOMC. That's what's setting up, and this starts us on that path. This starts us on the path of that rally that's anticipated. Again, the basis of the rally, and I'm not a macro analyst or anything, it's just common sense. The basis of the rally is that the FOMC has been priced in. We know what CPI has done. We know what the bank situation is, which has caused us to drop from these prices up here a couple of weeks ago. Right, the 9th of March, the Thursday, is the SVB announcement, and look at what we've done since the SVB announcement. Signature Bank over the weekend, and we are holding. The market's not terrified by this news, so it's all been priced in. So that just leaves a lot of room, unless news comes in, it leaves a lot of room to the upside. Okay. So that's the context, that's the narrative of what we're looking at. Looking at the big picture, so we're going to merge this into the prior profile, and yesterday is right inside of this composite. That's going to get merged as well. And so this composite's filling in nicely. Remember, it was a double distribution composite, and now it's kind of filled in the middle, and we are on the other side of the point of control of this composite, again targeting this 40.74 high. That's what it looks like currently. We have support, strong potential support here in the 20 area, in the 20 area. We're shooting for 74 today. The gap to settle is very unlikely, and not expecting this. Although if we do get the gap to settle, trade, that's going to be a nice surprise. That's the Monty Hall problem right there. The probabilities start to play very, very well for the short side because it's likely to overshoot. So the expectation this morning is a very brief attempt into the range of Monday, and then to start to walk itself. So if you can get a pullback against really clearly defined risk for a long, you're going to, well, I'm not going to tell you what to do, but I'm going to look to hold on to that into 74 at least. Okay, and then once we get through the 74, there's some areas above there. We'll look at the intraday chart for that. So let's scrunch this a bit. So there's the 74, last week's high and the FOMC high. And then once we get through that, it's 40.87 and then 4100. And then we have a naked point of control, 4111 up here. So that gives us quite a bit of range. The 4111 is a little bit out of reach. Remember, the day stats in this, sheet, that gray box, the ES is 80, but that's the extreme of what we would consider to be normal. The point of control of the range is is around 50 points. It's around 54 points. So if we measure 54 points on a pullback to 40, 25, 40, 20, that gives us 40, 70, what? 40, 74, 40, 75. So that's the extent of the runner that's expected today. You'd want to scale well ahead of that, and if it does push through, it's likely to spike through a little bit, but then you're confronted by the 40.85 above here. That's the lay of the land, folks. That's the narrative, and it's playing out as expected. Again, we're walking through this day after day after day. And if this is your first, if this is the first time you've attended a Trader Bite, it's kind of difficult at the beginning, but it's kind of like it's like coming in on in the middle of this first season of Breaking Bad or Sopranos or The Simpsons or whatever a series you'd like to watch, Peaky Blinders maybe. You don't really have the full story, but you start to pick it up. Quite a bit of lifting going on here. Check it out. Look at that. Quite a bit of lifting. Huge delta right here. Huge delta right now in the S&P. But look at how much it's contested. Let me enlarge these dots a little bit. Oops. Did that not take? Yeah. Enlarge these dots. You see it's contested into the 40 as we push in through the 40 the 40-40 into the 40-50. We're seeing it get contested here, but there's quite a bit of lifting, and that lifting would not take place and these dots would not appear unless there were sellers standing in the way and trying to fight back. So let's look at that on the order flow chart. Right there you see a lot of dots, big dots, boop, 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 all the way up. Okay. Anyway, that's the plan for the S&P. The Nasdaq, if you recall yesterday, again, let me play this back. The Nasdaq, we went into the Nasdaq here, and I drew this. It is really compressing, but I'm expecting it to break to the upside. The Nasdaq's trading at 12,880, currently right in here, right in there. So it's well on its way. So we pulled back yesterday. We closed a naked point of control here at 12,650. We finished okay. The Nasdaq yesterday actually had an open drive down, believe it or not, which is pretty aggressive initiative behavior out of balance. So it looked like it was breaking out of that triangle, but the Nasdaq is expected to continue to challenge, and it's likely to challenge all the way up into 13 31 right back here. You can see the Nasdaq's relatively weaker to the ES when it's been stronger all along, because the ES is looking to challenge the equivalent of 1308.2, the FOMC high, and it's still sitting down here inside of Monday's range. If you recall, the S&P is actually trading above Monday's range currently. So on a relative basis, short term, the Nasdaq's slightly weaker, but the Nasdaq's made a much bigger run than the S&P has. Crude, very interesting. Again, crude is moving back towards the key price up here of $77. It has it drove up on Monday, finished relatively strong, gapped, Friday, gapped on Monday, didn't look back very much, finished very strong Monday, and then Tuesday just picked up where Monday left off, pulled back, had 4 strings of singles. It closed just one of them before it started to proceed with an upward auction. So the crude has cleared this low volume node between 71.75 and 72 and a quarter, and is moving back towards 77. So crude is not is kind of a tough short for anybody that's holding a swing short right now. I'll leave you with that. But first, before you go away, I want to remind you that today, Wednesday at 12 p.m., there's this show that I'll be a part of to really bring us up to speed on the macro picture and what's going on with the Fed, bank failures, inflation. What's next? What is the market doing next? And we have Bob Elliott on here, who's, by the way, if you're not a follower, Bob Elliott on Twitter, great follow, very, very good threads on the macro. It's like learning economics from scratch. And then there's Tavi Costa, who's also a great analyst. We're going to be talking about the Fed, banks, inflation, what to expect going forward now that the first quarter is pretty much done. If you go to edgeclear.com/Delhi before 11 a.m. today and sign up, you're eligible to be in the drawing for two iPads, 10th generation iPads as a giveaway. Okay, I'll leave you with that. Good luck.